Good morning, traders and investors, and welcome to Wealth Dom. In this video, we're going to talk about the top 5 fintech stocks that I think are going to outperform the S&P 500 over the next 12 to 36 months. So we're going to go over 5 stocks that I believe have a high probability of success. Also, we're going to create a small little 5-stock portfolio where we're going to allocate $5,000. Oh, that's our cash pile. And we're going to create a weighted portfolio for weights for each of these stocks. Now we're going to do a little bit of technical analysis, a little bit of fundamental analysis, and I would say we would just jump in there and get started. But before that, hit that like button on the video if you're enjoying it so far. Also, subscribe to the channel if you want to see more technical analysis and stock picking like this. Now, this is just my personal opinion, not financial advice. I'm Noble PM, and I'm here to build and protect wealth. Let's get started with the very first one because we want to add them to this portfolio and also weight them. So currently we have $5,000 as cash and we want to allocate this cash somewhere. So we have 5 stocks. Let's go to the very first one, which is, of course, my favorite, MercadoLibre. Now, I already personally own this stock and it remains the #1 stock for me on the fintech level. And that is why we're also going to allocate most of our portfolio to this stock. Now, we first of all need to understand what the fundamentals are. So fintech revenue growth 40 to 50% year to year. Just check out their earnings. I already made a video on this. MercadoLibre also has the Mercado Pogo, which is handling the billions of payments monthly. The credit portfolio is expanding with improved margins. The gross margins are over 50% for e-commerce, and it's one of the strongest ecosystem modes in Latin America. So just think, when you're thinking about MercadoLibre, just think of a combination between Amazon, PayPal, and Shopify in a 600 billion emerging market. Okay, so on a technical view, they're still consolidating here after they had a little bit of a pullback. This is also, let's just say, year to date, they're up 20%. So it's just, I think this is a period of consolidation. For the long term, look at here at the 5-year diagram, the long-term uptrend is still intact, I would say. It's not a downtrend for the long term, just a consolidation period here. So also an idea for long-term DCAing, buying fractional shares, if that's your thing. I'm not a fan of buying fractional shares. Now, the future outlook for this company is just to the upside. A mean level 21% over a year, average level 39%, a really optimist level of 70%, so price target of $3,500. Well, that is just amazing. The cross-border e-commerce expansion, also the annual EPS is poised to grow for this year, 2025, to $41 a share, then in 2026 to $61 a share, then $84 a share, and in 2028 to $125 a share. Just think about this 3 to 5 year, actually a 3 to 4 year expansion. 2025 is almost done. This is why I'm saying 12 to 36 months. This stock could triple, or at least the EPS. The revenue also upwards, poised to triple here. Increased credit potential for merchant services, and still a very early in Latin America markets. So risk, of course, there are some risks. FX, volatility, because if you take a look at this chart, also we're going to do here a little bit of price target. This is a 1-year daily chart. You can see the downtrend here for the year, but on the 5-year basis, it's in an uptrend and didn't even hit the 100-day moving average on the 5 years. So on the 1 year, underneath of the 20-day moving average, which is just in reverse with everything else. So I can understand the fears in this particular stock price now. The stock price right now. Also, another risk to consider is competition from Nubank and Shopee, but this is a position. This is a core position in a fintech portfolio, if you would ask me. This is why I'm also thinking about, not just thinking about, but actually I did buy some stock here, but it's also still a great possibility to add to the portfolio. Now, how much should you add? Well, it is a stock which is currently at 2000 in the pre-market, $2,077, but this could change. We're going to take the last day's close, which was $2,058. So if I would just pop out the calculator here, a $2,058 from a $5,000 would be a roughly 41 weight in the portfolio. Now that is massive, but the stock is as it is. Could it do a stock split somewhere down the road? Maybe it will do one, but well, for this to happen, I believe it's going to take some time because we don't have any kind of splits in the near future. So let's go to our portfolio and let's add this as a 41%. So I'm going to add the ticker symbol MELI, that is MercadoLibre, and we're going to just remain with financials here. We're going to add the quantity of just one, and the average price of $2,058 a share with a current price of $20.58, and we're going to weight it as 41% of our portfolio. It actually should be at 40-ish%. Now let's add it to the portfolio. We have now two positions. We just have to subtract from our cash now position. Actually, I'm going to delete the cash position because we are going to subtract from it. So we had $5,000. Now we need to subtract from our $5,000 our $2,058 remaining, leaving us with $2,942 to allocate into the very next one, which is NU Holdings. Yes, you heard me right. The stock, which is up 47% on the year. The fundamental strength of this is just amazing. Fastest growing neobank in the world, 100 million plus customers across Latin America. Also extremely profitable, ROE over 30%, a return on investment, and low cost to serve, which is equal to a massive scale potential. If you want to talk about risks and downside, of course, there's still risk with all valuation potential. Credit default is always a risk. And of course, regulatory uncertainty is also always a risk. The projected annual growth is from $0.6 a share in 2025 to $0.84 a share in 2026, then at 1.09 2027, and at in 2028 to 1.62. So where are some good levels to buy this stock? Because it's currently, well, it's up there. We are currently on a 1-year graph here, and this little fellow has still potential to go down. The good areas of resistance, or actually support in our case, but with this range right here. So this stock still has potential for even more of a pullback, and a really, really good buy zone would be the 13-ish zone down here, even down into its last line of support, which would be $11 a share. But I would say that between $13 and $11 a share is a really, really good buy price here. Even if you go on a weeklies, we can still say that this stock does not yet hit its 20-day moving average, which leave us some open possibilities to even more of a correction. But if you want to add this to your portfolio with a right now with a long time horizon, as I said, 12 to 36 months, even with the potential of a correction here over the next year and down for its turnaround, well, let's just say that a maximum allocation of 25% is where I would start with this stock right here. Now, 35% from $5,000 is $1,250. Now, with the current price, so if you would allocate it right here at its current price, which is $15.30 a share. So let's bring out the calculator again. A $1,250 divided by $15.3 would give us 81 shares. Now, I'm not going to round them up. I'm actually going to round them down. Let's see if we can allocate some kind of share somewhere else. So let's go to the portfolio. We know we want 81 from NU for our NU Holdings Ltd. Again, financial sector. Average cost, as I said, is 15.32, and you can later on just track this portfolio. Also, we're going to revisit this portfolio in 6 months, in 1 year, and so on and so on. And we said that the weighting should be 25%. So let's add this to our portfolio. Now this is going to reduce now from our current $2,942 that we had left. Let's replace it here, minus the $1,240.92. We have remaining $1,701. So let's replace it here in a cash pile, and let's move on to the next stock, which is, I love the ticker symbol. It's block, but the ticker symbol is XYZ stock. So remember when I would do a video and just mention as a whatever stock and you would say XYZ, well, you can't mention it anymore because you mention XYZ, then you're mentioning actually block. So block fundamental strength is as following: a cash app generating massive user engagement, a Square ecosystem for merchants which is still expanding, a strong cross profit growth ROI, and of course, integrating crypto, which is boosting their relevance with younger users. Now, on the year, it's kind of down. It's also down on the 5-year, and it's pretty much down. It has had its peak at $268 a share. So risks are as following: execution mistakes, young company competition, threats from PayPal, banks, and Apple, of course, and a high historical volatility. As you can see here, the stock could go up, it could go down, even in this environment, up and down from $95 to $46 to $77 to $57. But this kind of gives us a good opportunity to add to this stock. So let's go to the charts right here and let's see where it's currently sitting on a, let's just go to the dailies first of all. So on the dailies, it's massively oversold with the RSI at 23, which is oversold. It's really good oversold, coming into resistance, into its support area right down here. But this stock could go down to the 44s, but we are in the range of where I would consider myself really comfortable with buying some of the shares. So every time the stock comes down, let's go down to the weeklies here, in this range, take a look at its all-time movement. The stock just bounced back, but it can still go further down. So that is why the 50 to 40-ish range is a good buying opportunity for the stock, at least in my opinion. Remember, I'm not a financial advisor. This is not financial advice. Just trying to do some technical analysis for me, and maybe you could also profit from it. How much should we allocate if we want to buy some of this stock? Well, not more than 20%, I would say. So 20% is our target. 20% from the $5,000 is just $1,000. Now, with the current stock price sitting at 57, that would give us $1,000 divided by 57.64, 17 shares that we could allocate to our portfolio. So, ticker symbol XYZ stock. Name, Block Incorporated. Sector, financial, let's just call it financial. Average price, currently buying it at, or average cost, currently buying it at 57.64. With 57.64 at the current price also. Let's just add this to our portfolio and reduce from our $1,700 to $979.88, leaving us with $721 for distribution in the next stock, which is PayPal. Our PayPal currently the all-time lows. So fundamentally, still one of the largest digital payments platforms. But I use PayPal for almost each and every payment. I'm in Europe, maybe that's why, but PayPal is everywhere. Strong cash flow generation, undervalued versus historical levels. The management is currently optimizing their cost structure. So for a long term, maybe this is a bottom. Also yielding a dividend of 0.92% yearly is not bad. The trend was slightly improving, but not yet. But it's also great for value-focused fintech exposures. So the future outlook, well, you should definitely check out this 3.0 version, cost optimization, margin expansion, stable growth, not explosive growth at all, which I like to see here. Founded in 1998. Now, there are some risks to the stock. Let's just be honest. Also take a look at the super chart here, the long-term charts. Low CEO execution, competitive pricing pressure, losing users to Apple Pay and Block. That's why Block is up there. Where should we add to this stock if you want to add? Well, you could add right here. As you can see, this is as down it gets. Maybe can go even deeper. Well, also they are yielding dividends right today. Could this go even deeper? They are oversold underneath their moving averages, but not oversold on the RSI. So this could go even deeper. Also, if you take a look at the weeklies here, the stock is just actually on the dailies, it's almost oversold. It's turning around here on the weeklies. It still has a little bit to go, but maybe it's never going to touch this this 30-ish zone of RSI. So let's allocate some to our portfolio with a maximum of 15%. And remember, this is an aggressive portfolio. We're going to rebalance that to what I think should be the best balance at the end. So a maximum of 15%, which would be $750. So if we would add $750 divided by the share price of 60.70, then we get 12 shares. So PYPL, PayPal stock right here in the financial sector with 60.7 and 60.7, 15% allocation. There we go. We can now move on to our very last stock, which is Affirm. Affirm with a, well, sadly just a 5.5% for the year to date, 14.42% growth. Still a very strong company. Fundamentally the largest BNPL provider in the US. Strong partnership with Amazon and Shopify. Growing GMV plus merchant expansion. Improving margins and credit performance. Affirm is a purest BNPL trade play as you can get. Now the risk with each of these are high credit risk, of course, extremely volatile stock and competition from Apple Pay and each every buy now pay later app out there. So let's do a buying range here. Affirm currently trying to bounce off is 50-day moving average, which is in a really bullish trend right now. Now this came public in the late 2021, actually in the early 2021s in January, and now, well, of course, underneath its all-time highs, but a really nice uptrend here. This is why I like Affirm. Now, we will need now to go back to the portfolio and do a little bit of rebalancing here. I made one small mistake on NU. This should be only 20%, so please change that in your portfolio. Also, this would mean a $1,000 allocation to NU holdings, which then would leave us to purchase not 81, but 65 shares. Change this to 65, and there we go. Now we have our very last one, which is a 10% only allocation for Affirm here. I still want to see Affirm having a little bit more of a pullback, and I would gladly add more to the stock. But for now, let's just go with AFRM, the ticker symbol Affirm in our financial sector. Affirm with only $234 left, and the stock currently costing us $65.69. So we're going to divide this with 65.69. We can only buy 3 shares from Affirm. So let's go ahead and here only 3 shares with a cost of 65.69 and a 10% allocation. There we go. We just allocated all of our money. Well, not all. We are still left with $37 here, and sadly we only have 4% weight in Affirm because we have our target weight and our actual weight on the right side. A $197 allocation is only 4%, so we're still missing 6% here because, well, we are over allocated on MercadoLibre. Not over allocated, but sadly I would like this to be only 30%. That's why this is not working in the portfolio. But if I would change this to 30%, you can see we are 11% over allocated, meaning then from this you want to sell later on some fractional shares to do so. But I wouldn't suggest you doing that. You did see that some of the price targets that I mentioned here, especially for Block or Affirm, are even further down. So maybe wait for better opportunities. You don't have to allocate your entire money at once. This is also my suggestion, or this is how I do it. Each time I allocate funds, I wait for the right moment, and then when that moment comes, would I decide, yes, this is oversold, and yes, the possibility is still out there for me to allocate even at a better price, then it's where I strike. And remember, it's the price you pay that matters. Okay, that's all that matters at the end of the day. The price you pay for the stock. So hope you enjoyed this video. If you have any kind of thoughts on these stocks, on different type of allocation, or even if I should change maybe PayPal for Western Union, that could have an idea, then please leave them in the comment section below. With this being said, I'm Norbert Menhardt. I build and protect wealth right here at Wealth Done. Like and subscribe. Catch you next time. Bye bye.